Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Equities here at Simpler Trading. This is your weekly Edge show for Saturday, May 7th. Today, we are going to take a look at some of the more impactful news that drove a very highly volatile market last week. You'll want to know about that, certainly as it relates to the markets going forward and what we can anticipate. From there, we'll take a look at the broader markets, see where we ended the week. Are we above or below support, and what we can look forward to there going forward as well. Last up, viewer question of the week, and it is all about taking a look at stocks that are outperforming in this highly downward trending market, and we'll see why they are outperforming as well. So from here, let's take a look at those news items that pushed the markets around. Certainly the highest impactful item was the Federal Reserve's announcement on Wednesday that they're going to raise the Fed funds rate by 0.5 percentage point, and then they will begin their bond buying program in June. All of this with an eye toward reducing the currently high inflation levels. Originally on Wednesday, after that news, the markets rallied very strongly into the close. However, upon closer consideration overnight, investors came in on Thursday, and we saw one of the largest sell-offs in the broader markets going back over near-term history. So from there, other impactful news as it relates to the markets was the fact that the US dollar as well as interest rates continue to climb higher. We also did see oil prices tick higher. We'll talk about the impact there. And then on Friday, the unemployment rate came in, and it showed that April, we are steady as it relates to that rate. But employee wages increased, and they rose again in the month of April. This is not good news for inflation because those higher wage pressures will keep inflation high, not what the market wanted to see. So we did see Friday's price action a pullback yet again. Next week, more inflation data on the table. We will get the core consumer price index for April on Wednesday, and then the producer price index on Thursday. If we get any kind of continued elevated data there, that could easily drive the markets lower, and that's mid to later in the week. So of course, we will be keeping a close eye on that. So from here, let's go ahead, take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500 index. And here we are with that price action last week, and we can see quite clearly a lot in the way of volatility. But let's go ahead beyond that and take a look at where the markets stand relative to near-term support and those momentum indicators on the daily chart. What I'm looking at here is the low for the S&P 500 on February 25th. It did get down to 4,115. That is the near-term area of support, and we did undercut that level 2 separate occasions last week. However, we closed the day and on those days, as well as the week, just to hedge above that 4,115. We did close at 4,123, so technically we are still holding above this key area of support. But let's take a look at these momentum indicators. The RSI is below 50 and trending lower, while the stochastics are also below this net neutral 50 in negative territory. Therefore, the overall trend for the S&P 500 is down. From here, we can take a look beyond those broader markets and some of the underlying sectors within the S&P 500. We're looking at a 2-month daily price chart of the 11 sectors. And I like to add this RSI. It's a relative strength indicator sorted in descending order because I want to see which industry groups are relatively outperforming the S&P 500. So we can see the S&P this week is positioned in the lower portion of these sectors. And then those sectors that are in front of the S&P, again, are relatively outperforming at this time. So up here in the forefront, your strongest sectors for the week, we can see consumer staples and utilities up here. These are defensive areas of the market. They do offer a nice higher yield, generally the stocks within those sectors. And they also are an area where companies are reporting earnings above estimates because these staples and utility stocks have been able to increase their costs, their pricing to consumers, thereby keeping their growth in place. The big winner last week was the energy sector, and it was up 10% for the week. We can see this nice MACD positive crossover as the group breaks out of this 2-week base. A lot of dynamics taking place here. Among them is the price of oil. We'll take a look at that. But even more impactful has been the stellar reported earnings from many bellwether, well-known energy companies that came out with strong numbers last week that are continuing to drive this particular group higher. Energy stocks fare well during periods of high inflation and rising interest rates. So a lot of positive dynamics taking place here as energy powers to new highs. So we can also take a look at these underperforming areas. You want to make sure you're not overweighted. Consumer discretionary down here again at the lower quartile. A lot of that having to do with Amazon. They did drop again 7% this week following last week's sharp drop. The company did lower their outlook for growth for this year, not what the markets want to see during this highly uncertain period for the broader markets. From here, let's go ahead beyond these sectors. We want to drill down even further. Take a look at these ETFs I procured. And in general, I want to see where interest rates are heading, the US dollar, the price of oil, and so on. So let's go ahead and dive in. Again, that RSI in descending order. And we can see up here at the forefront, this is the yield on the 10-year Treasury continuing to inch higher. It is now above that pivotal 3% level and continuing to rise. We can also see U.S. oil, Brent crude up here in the forefront, back up above that $110 level as oil prices continue to climb, a lot in the way of reduced supply amid continued demand driving oil prices higher, the geopolitical conflicts and other items that are impacting this group. The US dollar is continuing to climb. It wasn't up a whole lot today, but it remains very elevated. This impacts areas of the market, such as multinational companies that export, because the cost or their revenues will be decreased as they export goods in the face of a strong dollar. Volatility up here at the forefront remaining elevated. It got up above 35 before settling at 30. And in the past, I've mentioned generally volatility levels around this 16 to 18 level is where you want to be. That is telling you that there is not a lot of fear or uncertainty in the markets, and it provides a much more stable backdrop for the markets to then trend higher from. And unfortunately, we remain elevated well above those levels. Let's take a look at some of these weaker areas. We can see technology. SOXX is semiconductors. They were up 2% for the week, but very clearly remaining in a downtrend. We can see software. They were down another 5% this week. Very weak price action there, as well as biotechs. IBB is the ticker there, down 3%, generally indicating market and investors' sentiment being negative when we see these riskier biotechs continuing to trend lower. From here, let's take a look at some of the areas that are seeing buying as in a very otherwise volatile market environment where many other areas are trending lower. First up, I will share with you a stock that reported their earnings today. This is Cigna CI. They are a managed care provider, and a look at this chart would not have you having any idea of what was going on elsewhere in the markets, but a couple of key drivers here as it relates to the stock's relative outperformance. The company did report earnings today, very strong. They saw a huge uptick in new membership growth, and more importantly, the management guided higher for growth prospects going forward as the impact of COVID is continuing to recede. So a lot of good news for investors there. The stock broke back above each of these moving averages. We can see it's poised to break out, that RSI trending upward in positive territory. And then we can also see this is a moving average. Convergence, divergence, MACD. When we get that black line crossing up through the red, it is indicating, for instance, going back here in late January, that the downtrend has ended. And if we get that crossover, it has entered into an uptrend. Now, of course, given the market backdrop as being negative, what I'm doing with stocks such as these is putting them on a watch list so that when the markets turn bullish, I anticipate these types of names to continue to trade higher. Let's take a look at another company that reported about a week and a half ago. This is IBM. I'll share with you some of the characteristics here as it relates to the stock being in a bullish position and precisely why. So IBM back here at the end of April reported very strong earnings, and in so doing, the stock gapped up. You want to see that high volume. We did see that, and it broke out of a base on that gap up. That's one of the strongest chart patterns that you can experience, but the markets pulled back in line with the broader markets. On Wednesday, IBM rallied with other growth stocks that saw strong days, but unlike other tech names, IBM retained that rally move so that it closed the week above this 10-day simple moving average. We can see that the RSI is trending upward above that 50. MACD up here in positive territory. A couple of other characteristics that are very important in this environment is the fact that IBM offers a 4.7% yield, and it is trading at a relatively low multiple, that price to earnings. It's trading at 22 times, which is considerably less than the average for the S&P. And those types of names that have high yields and offer a lower PE are viewed as value stocks, and value stocks are relatively in favor, certainly compared to growth stocks. I'm going to leave it there. Everyone have a great weekend, and I will look for you here again next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.